June is over, July is here, and that means it's time for the mid-year housing report. The Housing Market July 2020 report is a comprehensive analysis of the Tallahassee real estate market at the halfway point in 2020. If you own a home in Tallahassee, this will give you insight into how your largest asset is doing and let you know where you stand if you would like to move now or in the near future. If you do not live in Tallahassee, this report is likely to reveal market conditions very similar to your own, though price points might be higher or lower. Today's housing market report contains so much useful information that I have provided clickable timestamps in the area below should you want to return to specific graphs that are explained in the video. Hi there, this is Joe Manausa with Joe Manausa Real Estate, bringing you another housing market report for July 2020. If you already are a subscriber, thank you and welcome back. If you are new to our channel and you appreciate thorough and accurate housing market reports, answers to your real estate frequently asked questions, and virtual tours of some of the nicest homes in Tallahassee, then you've come to the right location. Hit subscribe to get started and the bell so you never miss anything. Overall, the market is as active as it was 4 years ago. The lack of inventory of homes for sale in Tallahassee is impacting buyers' ability to find homes because the demand is there. We have buyers awaiting each new listing entering the market. To be clear, we need your home if you've been thinking about selling. Today's report identifies the segments of the market that are most challenged for supply, and then we dig deeper into the data. I'm going to start with the overall view, then drill down to different areas and price ranges in Tallahassee. Finally, we'll examine what's happening with foreclosures and mortgage interest rates as well. By the end of this video, you'll be knowledgeable about not only the big picture for Tallahassee real estate, but also the picture for your specific area and price range.
Our first graph is the year-over-year home sales report. And what this shows is each month compared to the same month in the prior year. What we see is the previous 3 months, the first 3 months of the COVID-19 pandemic, have reported declining sales when compared to last year. June sales were down 9.8%, though that'll probably come down a little bit as some late sales are reported. Maybe it'll be closer to 9.5%. May sales were down 27%, and April sales were down about 18%. So significant declines in the first 3 months of the pandemic. This next graph shows year-to-date home sales. So closed home sales from January through June of each year. Currently, home sales are down about 8% when compared to where we were at this time in 2019. In fact, if you go back and look at 2016, we're roughly the same as that year. And that means 7 of the last 19 years were better than what we're doing this year. So sales are down, but certainly not as bad as we've seen in previous years without a pandemic. Now, the opposite side of sales is fresh new listings coming on the market. What we look at in this graph is year-over-year fresh listings. And a fresh listing is just a listing that hasn't been on the market previously. So we look at, again, since the pandemic started, significant declines in the number of sellers entering the market. Over 30% 3 months ago, almost 30% last month. And then in June, we saw that the decline only dropped to about 15%. So I think this might be a sign that sellers are getting more comfortable with the thought of entering the market, even though we have pandemic conditions continuing. Overall for the year, fresh new listings are down 15% compared to last year. And this is the worst of the past 7 years for new inventory coming on the market. As we get further into our report, you'll understand that this is a major problem because inventory was already too low when the year began, and now we're seeing the fewest number of new listings entering the market. This next table shows the relative supply of homes in each quadrant and each price range in Tallahassee. Red areas are shaded to show very low inventory, making it a very strong seller's market. Orange areas show relatively high inventory and making it a strong buyer's market, while the green areas show a balanced market. Anywhere you see red on this graph, this is where we strongly need more listings. If you look in the Northeast, we don't need any listings over 550,000, but under 550,000, there's a lot more buyers standing by waiting for more inventory. It's not the same in each quadrant, so you have to look across. This next graph is the activity report for the entire market. And what it does is it plots the total number of listings each month, and that's what the red scraggly line is there. And it shows the total number of sales each month, that's the green line. And then it measures the relative supply of homes, the months of supply, as blue bars. If you look at the far left of the graph, you can see we were once glutted with inventory and had far too much supply. And now when you look to the right side of the graph, we see the opposite. We have far too low inventory. A healthy amount of inventory is where this gold bar runs across the graph. And that's what we call market equilibrium, or roughly 6 months of supply. Currently, our relative supply of homes is at 3.5 months, and that is way too low for where we need to be to have a healthy and strong market. Right now, we know the market's down, and it's down not because there aren't buyers for the homes, but because there aren't homes for the buyers. When we look at a similar graph, but only look at homes priced over 600,000, we see that there's a relative supply of homes that is still strongly in the buyer's market range. Currently, we're looking at eight and a half months of supply, and that is a little bit too strong, and that means it's a buyer's market for homes priced above 600,000. Our next graph shows what we call the normal sold percentage range. And in a balanced market, we would expect each month's sales to fall within that red band. And you can see that for years, it sold below that range because we had so much supply. And now today, it's the opposite. It's all selling above that range. And what that means is we're seeing a large percentage of the available inventory move every month. And so buyers have far less homes to look at when it comes time to move. If you wonder how competitive your home would be in the market, this next graph shows all the current listings in the MLS. Homes that are already under contract are plotted in green. Homes that are not yet under contract are plotted in red. And so if you follow across the price ranges, you can see there are a lot of homes in Tallahassee on the market already under contract. Over 50% of the homes priced below $300,000 are already under contract. And that means it's really tough for buyers below $300,000 to find a home right now. If you own a home that's worth under $300,000, there probably hasn't ever been a better time to sell.
Now, before we drill down to each quadrant of the Tallahassee housing market, I'd like to know if you're enjoying today's report. If you like this video, please take a moment to tell YouTube that it's a thorough housing market report. You can do this by clicking on the thumbs up and subscribe button, and then by clicking the bell to receive notices of my future housing market reports. If you think this report could be better, please leave a comment below and tell me what else you would like to see. Are you curious about where Tallahassee is moving? This next graph shows us Tallahassee relocation trends.
Well, here's where Tallahassee's moving. What we've done is we've broken Tallahassee down into the 4 quadrants, and more than 50% of all homes sold occur in the northeast of Tallahassee, and 30% occur in northwest. So 80% of all home sales are on the north side of town. About 15% are in the southeast, and about 5% are in the southwest. So 80% in the north, 20% in the south. When we isolate northeast Tallahassee and break it down by price point, we can see the average number of listings for the past year are shown in red, while the average number of sales over the past year is shown in green, and it plots the relative supply of homes in blue. The gold band, again, represents market equilibrium, where we consider it a balanced market. When the blue line drops below the gold band, it's considered a seller's market. And we can see it's a seller's market in northeast Tallahassee for all homes priced below $550,000. It becomes a buyer's market above $550,000. Northwest Tallahassee shows a different story. For homes priced below $350,000, it's a seller's market. But once we get above $350,000, the data is sporadic, and that's because there's relatively few sales. Once we get above $550,000, it's definitely a strong buyer's market. There's a strong seller's market in southeast Tallahassee below 450,000. Once you get above that point, it goes and bounces around a little bit as the number of sales decline. And finally, there's southwest Tallahassee, where homes under 150,000 are in a strong seller's market, and after that it's a buyer's market above 150,000. I've had quite a few people ask about the health of our market, and one of the first things I turn to when I'm measuring market health is I look at the distressed properties report. When we look in the MLS and we break down the listings by type, where green here shows arm's length or healthy listings and the red ones show distressed ones, we are hitting a low of right at 5.2%, which is the lowest since we started measuring this in 2010. I expect to see this number continue to decline because we have such a strong seller's market going right now that homes are going up in value faster than normal. And what that means is there's enough equity in properties that if people get in trouble, they can sell their home and there's enough money there to pay off the mortgages and even have money left over for the seller. Finally, let's take a look at mortgage interest rates. The data in this graph comes from Freddie Mac, and we see 50 years worth of rates. And the lowest rate on record in the last 50 years happened last month. 3.23% was the average rate in June of 2020. To put that in perspective, rates were over 18% 40 years ago. There have been times when the mortgage interest rates were more than 5 times our current level. And that means now is an incredibly good opportunity for buyers to get into a home, lock into a 30-year fixed mortgage, and have rates that are incredibly low.
So now you're up to speed on the Tallahassee housing market. You might be curious about how the lack of inventory is affecting home prices. Take a look at this next video. It shows 30 years of home prices, inflation adjusted, in Tallahassee. You'll be amazed at how today's home affordability compares with the past.